Hello, this is Frank Snyder. It is Wednesday, September 21st, 2022, and I thought I would give you an update. First, the bad news. Large cap growth, and this is all according to Morningstar, and this would be as of September 20th. Large cap growth is down 36.45%. NASDAQ is down 26.97%, and the S&P is down 19.1%. So today we're going to have a rate increase announcement. It has been just thus far this year the most tumultuous year that I have seen since the 2008-2009 recession. So that's the bad news. Here's the good news. You have been getting more defensive as the year has progressed, and we are pretty defensive now. Now, due to compliance reasons, I can't mention specific funds and ETFs, but just as a general rule, if you look at your account, your number one holding is cash and cash equivalents, meaning these are things that I really can't get any more defensive than that. The US dollar, utilities, hedge type funds and strategies, a little bit of balanced, and consumer staples. And consumer staples are things like toilet paper, paper towels, macaroni and cheese, companies that produce those types of products that we all have to have. So you're down, but we are not out by any stretch of the imagination. So people are asking me, why is this happening? It doesn't look that bad out here just yet. And the answer to that is you have to think of the market as forward thinking. It is normally 6 to 9 months in advance. So it's telling us what things are going to look like in 6 months. So inflation was over, I believe, 8% year over year just recently. And the Federal Reserve does not like inflation. This is something that literally just takes the middle income people and lower income people and makes everybody poor over time. If prices go up 6, 7, 8, 9, 10% every year very, very quickly. And you have seen this going to the grocery store. You have seen this at the lumber yard. You have seen this when you go to buy something. The entire supply chain prices have risen tremendously. So the Federal Reserve has a couple tools to combat this. The money supply is probably the best tool, but they have not really been talking about this, or you don't really hear about this. But when you have too much money chasing too few goods and services, that is the classic definition of inflation. Prices are going to go up because prices are going to get bid up. What they have been using is the interest rate, and they have been raising interest rates. So think of raising interest rates, if they do dramatic fashion, as like using a sledgehammer to fix your iPhone. It's taking a drastic approach. When mortgage rates go from essentially 3% to 6% in just a brief period of time, people are making now buying decisions based on a huge difference in their payment, and especially when housing prices have gone up in the first place. So that's just one example. So it slows demand. Mortgage applications have plummeted recently. So again, as prices continue, as interest rates go up, it changes people's desire to purchase things. And they have said that they are going to continue to do this until they get inflation under control. So when is that going to be? Nobody knows. So that's the really bad news. So this, I believe, is not going to end anytime soon, but do understand that the market, again, looking ahead 6 to 9 months, will start to look better before actually the economy does. So the key will be, our job will be to, help everyone to take advantage of those opportunities when they come up. As I like to say, the sun will rise again. This too shall pass. As long-term investors, we have to look at this as just something that historically is going to happen. There are cycles in the economy, there are cycles, in business. So we're just happen to be in a pretty bad cycle. So we will monitor and work hard every day. We are using substantial amounts of, we're leaning on other people, so to speak. We have a trade coach now. We get reports about 3 times a week, and we meet once a week, and we look at every sector, and we look at the different funds and ETFs that we think have potential, number of systems that we're using now. And again, our micromanagement of everything, we hope, will allow us to come out of this in a positive fashion. So hang in there. That's all that all of us can do. And again, if you have any specific questions about your accounts, do not hesitate to call. And again, we appreciate your business, and everybody have a good day.